to this quarter's AML update. We are both back this month. I was away on holiday last time, but I'm here, Brian Rogers, as many of you will already know, and I'm joined again by my colleague Mariam, who is talking to us from Poland today. So I'm hoping that internet and everything else will behave itself. We have tested it, seems to be working okay so far. So for those of you who haven't been with us before, in terms of administration, if you have any questions, if you want to put those on at the end, and we'll pick those up right at the very end. But if you want to put those on as we go through, that'll be fine. Competency, so if you're a solicitor, then it's A2. We are recording the session, so that will be available after the event. And please feel free to download the recording and use it for internal training purposes if you wish. The slides, I've uploaded those to the system, so if you want to pick those up and follow through, then you can do. In terms of LinkedIn, I've been doing a lot of stuff this week and last week on LinkedIn around regulation and compliance for law firms. So if you want to connect with me, then please do. In terms of links, if we think there is a link that is relevant to you, then we have put those on the slides as well, so you can actually get more detail should you want it. And of course, don't forget to click Save a Seat to register for future webinars. And while we're talking about future webinars, we've got our compliance update on the 6th of November, that's 12:30. And then I'm going to be running a webinar with a financial specialist on is your firm financially sustainable? And of course, we've got interest from the SRA and the government around client interest. And I know there's a lot of firms that are sustained through the use of client interest. Well, it may be that if the government and others have their way, that may not be there. So this may be one that you will want to attend. But in terms of the main event, why are we here? Well, we're going to have a look at AML developments, as we usually do. We're going to have a look at sanctions updates as well, have a look at some enforcement, and as I said before, we will have any Q&A at the end. So please do put your questions on. We do tend to have about 10 to 15 minutes, depending on how many questions come through. So we will try and adapt things as we go, depending on the number of questions that we see. So in terms of source of funds and wealth, this was one which sort of hit me when I was looking at an SRA report. And they said that the AML question that caught most people out was on source of funds / source of wealth checks. So I thought I would just go over that one quickly. So what they did was they put a question out there and they said, is a source of funds check always required? And they gave 3 different options. They said, yes, you must always carry out a source of funds check, or it is required where necessary based on a risk-based assessment and specific regulatory triggers, such as PEPs and high-risk third countries. And finally, it is only required if client money passes through your client account. Now, hopefully, you will have already identified that it was the second one that was the right answer. So that is, it is required where necessary based on a risk-based assessment and specific regulatory triggers, as I say, such as PEPs and high-risk third countries. Now, what the SRA then went on to say was, well, why is that the case? And it says, if the client is a politically exposed person, i.e. the PEP, you must apply a source of funds check under Regulation 35. If the client or counterparty are established in a high-risk third country, you will need to check source of funds also. In addition, Regulation 2811A requires firms to undertake a source of funds check where necessary, though this is not defined in the regulations. We interpret this, i.e. the SRA, as requiring a risk-based approach. This means your firm, client and matter risk assessments need to be considered when deciding if it is necessary. And it finally goes on to say, the requirement to do source of funds checks might apply even if no money is coming through your client account. So it is really, really important to make sure that your firm-wide risk assessment addresses this. And as the SRA has said in what it was saying there, you need to make sure that your client and matter risk assessments also reflect this as well. Mariam, now obviously you deal with quite a few customers. Have you any thoughts on this one? Anything you're seeing out there that might be relevant?
I think it is worth to remember that even though you don't accept funds for transactional purposes, however, for sanctions, you need to do necessary checks on all funds. That includes legal fees, disbursements, etc. So consider as well as compliance with the UK sanctions regime. And it is worth to note that the recent fines includes failures to complete source of funds, source of wealth checks, and these were technical breaches. So even though the risk of money laundering was low, it was still a breach because simply the fee earner has not done what they were supposed to do.
Yeah. So definitely making sure that firms don't take a tick box approach.
Yeah.
It is done as it should be. Good. Okay. So hopefully that's clarified that position there. The AML National Risk Assessment came out a few months ago, but obviously some people haven't caught up yet. So we wanted to put this one out there. The UK's National Risk Assessment of Money Laundering and Terrorist Financing, jointly developed by HM Treasury and the Home Office. It's the first such report for 5 years. So obviously it's caught up with a lot of things that have been going on over that last 5 years. It acknowledges that AML non-compliance is relatively low in the legal profession, but adds that the high risk rating of previous reports in 2020 and 2017 cannot be downgraded due to the nature of the work. The volume of cases of suspected money laundering that involve lawyers has remained high relative to the small number of regulated professionals, the report says. Obviously, over the last, I would suggest, probably 2-3 years now, we have seen a lot of law firms being fined for breaches. So, and I was talking to Mariam about this just before we came on. We do wonder how many more firms are going to be sanctioned once the SRA has completed its review of annual AML inspections. I suspect there will still be some out there that will have difficulties. Hopefully we haven't got anybody saying this time round, yes, everything's fine and dandy, and then the SRA call in documents to find that actually they've misled the regulator. There has been a recent case where the SRA did, in effect, find dishonesty in terms of misleading the regulator. So that's the last thing you need. So make sure that you haven't told porkies, as they say. Okay. Sorry, Mariam.
Oh, no, I just wanted to note in relation to terrorist financing, while legal sector remains low, we have a change in relation to trust and company services provider, and they are now marked as medium. Therefore, if any law firm is registered as trust or company services provider with the SRA, please make sure you update your firm-wide risk assessment.
Yeah. Thank you for that, Mariam. That's really useful. And following on from that, the SRA has obviously done its sectorial risk assessment. It's found a number of emerging risks. So we've got capital flight from high-risk countries, so money coming out of those sorts of countries to here. We've got client account issues, i.e. people using the client account as a banking facility. We'll come back to that bit later on. We've then got poor client due diligence, changing firm business models, consultant firms, decentralized AML checks, and we'll come back to that as well later on. And of course, we've then got technology. And one of the things that's pretty hot on the news at the moment is in terms of conveyancing and the digital ID and whether, what sort of impact that will have on rushing things through in terms of conveyancing transactions. Will it have any impact And if it does, what sort of impact will it have? Mariam, have you got any thoughts on the SRA assessment?
I think there's nothing unexpected. I would just say, please make sure that you consider each point within your firm-wide risk assessment to make sure that you address those risks and assess what's the level of risk appetite for your law firm.
Yeah, and the SRA will expect people to have read both the national and its own sectoral risk assessment and made a note of anything relevant in there. But as always, the SRA wants to know that you have read it. So the only way that they will see that you've read it is either by saying, we need to change what we do and this is what we're going to do, or this doesn't apply to us, but we've read it. Yeah. If you don't have any sort of statement there, then they will assume, well, you haven't read it. Now, there was a while ago, there was a little bit of confusion because one part of the SRA was basically saying, no, you don't need to do that. If it doesn't apply to you, you don't need to make a note of it. But then the ethics helpline turned around and said, yes, that's what we are advising. You must make a note. So I think best practice is make a note whether you are going to change something or not, just so that it does show that you've looked at these various things, and that applies to everything rather than just these particular assessments. Draft money laundering regulations, and we talked a moment ago about the client account and using the client account as a banking facility. There are changes coming through, and one of the things that has become clearer is in relation to the client account. And what they basically say is, although the changes give banks greater flexibility to consider the risk posed by a client account and manage risk accordingly, the policy intent is firms should provide details of the underlying customers to the bank upon request, i.e. details of the solicitor's clients. The draft regulations contain a provision that this disclosure would not breach any restriction, however imposed, on the disclosure of information. This raises a number of questions for solicitors, in particular whether this will override trust in the confidentiality of the solicitor-client relationship and how firms can manage competing duties of legal professional privilege with the duty of disclosure. Now, as you would expect, the Law Society has come out firing on all cylinders, saying we don't agree with this. And one can understand that, because if law firms are now having to take on, in effect, the work of the banks, and they've then got to be answering, the questions of the banks. Well, why aren't the banks doing all of this? They're where everything starts. So it'll be interesting to see what happens with this one. But Mariam, have you had any sort of thoughts on these changes that are being proposed?
I think it is expansion of the current requirements. So I am aware that law firms are asked by their banks to provide information in relation to client account, for example, whether they know source of funds of the money they accept, what type of international transfers they make. So they need to declare whether they make transfers to high-risk countries such as Iran, Russia, North Korea, etc. So they're already being asked those questions. It is interesting because at the moment, we don't have provision in place for law firms to share CDD data with other sectors, even though there is a big focus on sharing data, cooperation between sectors, etc. But as well, we need to consider whether any information might be covered by the legal professional privilege. So I think that will be interesting to see.
Yes, I think it's, from the blogs I've seen on social media, a lot of people are saying, why are we just having all of this piled on us? When do we get time to look after our clients and do all these other things? So having been an MLRO in practice, I feel your pain, even though it wasn't as bad then as it clearly is today. Okay, DAML threshold. So this is the threshold for submitting a defence against money laundering. Rose to £3,000 from £1,000 on the 31st of July, in line with the proceeds of crime threshold amounts order. So Firms will not commit money laundering offences if the value of the criminal property in the proposed transaction is less than £3,000. One aspect of this is that firms can return money to a client to end the business relationship without committing a criminal offence if the value of the suspected criminal property is below £3,000. I'm not sure about you, Mariam, but I'm not sure that's going to apply to many firms. But have you got any thoughts on that?
However, I would suggest referring to the Law Society guidance, because that's different for the financial sector comparing to legal sector. However, something I've seen is firms are confused about mixed criminal property. So when we have potential criminal property mixed with legitimate funds. So again, just make sure that you understand what is the criminal property, what is not. But as you said, Brian, it probably won't be applicable to many law firms, because if you return deposit, that will be probably more than £3,000 for most of the properties.
Yeah. And again, it's something that you need to put in your firm-wide risk assessment in terms of, well, this is unlikely to affect us if that is the case, or it won't affect us at all. And if it is likely to affect you, well, how will that be? So you need to explain all of that. Okay, more AML fines. So there have been a lot out there, but I've posed a question, which I've been posing quite a lot recently. And I've read a lot of judgments about the firms that have been fined. But the big thing that sticks out to me is, where was the COLP, the MLRO, the MLCO, the senior responsible officer, because the vast majority of these firms had CQS and retained CQS, and some even had Lexel as well. But ultimately, where were the partners? And why didn't the independent audit function pick up the issues before the SRA did? And it really is a sort of, it's a difficult one to get hold of, because all these people are required as part of the money laundering regulations. They are required as part of the SRA code of conduct. They're required as part of CQS. And the code of conduct for firms clearly says that partners are ultimately joint and severally liable for ensuring compliance within their firms. So where were all these people in those firms? What were they doing? And as I say, I've read a lot of the judgments, and what I don't seem to be seeing is the SRA turning around and saying, or asking the same question as I am. They seem to be quite happy to say, yes, they were breaching this because they didn't have a firm-wide risk assessment. They didn't do their client and matter risk assessments. They didn't have their policy controls and procedures in place. But they don't seem to have asked the question, but why did all that happen? What was the ultimate issue here? Well, the ultimate issue here was that it seemed a lot of people were either asleep, or they just weren't around or focusing. Whatever it is, might go back to the point that I made earlier on, and that is, well, they're serving their clients. But yeah, that might be the case, but you've still got to comply with all of this. So it is a worrying one, I have to say, because the COLP is ultimately responsible for compliance. Say the partners are right at the very top. The COLP is in effect the one individual that has to look at all of this, and of course then everybody else reports to them, and they then report to the partners. So as I say, where are all these people? What the SRA has also said is that the firm-wide risk assessment is a standard document requested by the SRA when carrying out an inspection or investigation. So you must have that. That is the first document that they will be asking for. And in effect, everything else flows from that. Now, one of the cases that I was watching the other day on the Solicitors Disciplinary Tribunal involved breaches of the money laundering regulations. And one of the questions that the SRA prosecutor was basically touching on was the warning notices that are issued by the SRA, i.e., why didn't you read these warning notices that came out over the years that you were supposed to have been compliant. And the individual turned around and said, well, I didn't have time. I didn't see it. I was working with my clients. And they clearly said that not finding time to read warning notices is not an excuse. So, yes, I feel your pain. I know when I was an MLRO, I had a lot of documents that I had to read. I had emails to send out to staff to say this has changed, that's changed, but we had to do it. Now, okay, I wasn't a fee earner as well. And so, it was pretty much part of my full-time job. But that said, you've still got to find the time to do it. Otherwise, you will, have to face the consequences of that. Mariam, I don't know, have you any thoughts on where all these compliance officers and functions were, or what you're seeing in practice?
I think there are two things. When I do AML independent audit for law firms, something I always ask, what's the involvement of the senior management? And sometimes I hear, yes, the MLRO sent the updated AML framework risk assessment. I just accepted it. So they're not really involved, unfortunately, and often compliance on one person. And they are expected to do everything. And another thing I always review during AML independent audits is actually billable targets. Do the fee earner have time for compliance to read those warning notices?
Yeah. I mean, there's all sorts of pressures on people. Again, I did a recent blog and we were talking about bonuses and financial incentives that don't drive compliance. They drive achieving the bonus. They drive achieving fees and things like this. And that is important, but it can't sort of then say, right, well, I'm just going to focus on that and compliance can just go over there and we won't bother with it. Enough said. I think the message is, I've got the message over there. Counterparty due diligence. This is one which we see quite often, particularly in conveyancing transactions, where you have the other side asking for assurances that you've carried out due diligence and things like this. You then have the party, the firm that's being asked, saying, no, you're not having that because our insurers say that you can't have it. You've then got reliance as well. So under the money laundering regulations, you can rely on others, but it has to be done in a certain way. And it's one of the things that certainly we've been pressuring the regulators on, and that is, why can't, if we're going to have reliance, why can't the liability for any errors or omissions be on the people who are providing the data rather than the people who are receiving it? They haven't changed that yet. Whether they will change it in due course, I'm not sure. But in effect, LSAG 516.3, sale, purchase of real property, seek to understand, and I've underlined it and bolded it, all aspects of the matter, including undertaking appropriate due diligence on the parties involved in line with regulatory requirements and understanding the source of funds and source of wealth used. So you do have to have that understanding, and you need to be doing this sort of due diligence. Now, I know a lot of you will be turning around and saying, well, we haven't got time for all of this. Unfortunately, you have to find the time, but it has to be done in line with the regulations. But in effect, it's both parties need to do CDD on their clients and sanctions checks on their client and counterparties. The purchase solicitors need to look at source of funds. Sales solicitors, steps taken, re-identity fraud, property fraud, vendor risks. So this is not just about AML, it's about fraud as well. If either solicitor has suspicion, other party, they need to investigate further. Now, it talks about appropriate. Now, obviously, appropriate is subjective, has to be risk-based. So again, you need to look at our third-party funds involved, third-party high-risk countries and all that sort of thing. It appears some solicitors aren't carrying out such checks and others are refusing to cooperate when requests are made. So again, what it's doing is it's giving the impression that either people don't know they need to be doing these checks, or they know they need to be doing the checks, but the people on the other side don't know that they should be facilitating these checks in terms of the release of client information, because you've got national insurance numbers, passports, and all that sort of thing. Now, what we have heard is that some firms will turn around and say, well, it's data protection. Well, no, if you actually have a look at data protection, there are the exemptions there in terms of, getting away from crime, working on various things like this. It should all be part of the sort of the consents that are in the client care letters, terms of business, and such like. It is all part of that process. We have come across some where the clients have turned around and said, no, I don't want my information released to the other party. Well, then you have to make a decision, i.e., am I willing to go with this? Because again, some of the red flags that come up in terms of money laundering are people refusing to give you information, and being, a real pain with things. They don't want to disclose certain things. But if you're looking to sell a house, buy a house, whatever it might be, then surely you want to cooperate. And as long as it's done within the appropriate lawful and regulatory framework, then there shouldn't be a problem. It's also a requirement from a contractual perspective of acting in good faith, as transaction may be void if checks are not carried out. So you need to bear that in mind as well. What have you come across in relation to this, Mariam?
I think the biggest issue is actually communication and what to do if any concern arises in relation to counterparty. And we have a lot of law firms saying, Mariam, I think the seller, we have some concerns. He might be there's a potential criminal activity, etc. What do we do? Whether we speak with other party solicitors, etc. So I know it's not easy. And as well, we need to consider if there are concerns about the other party, law firm might actually be involved as well. So we have to be very conscious how we approach it. And I understand it's not easy. And that's when, I think we should take just each case by case, and don't have a general approach. Just review each case, speak with your MLRO, and don't wait. That's my biggest advice. Don't wait. If you feel something is not right, just speak up, seek help.
Yeah, better to do it early rather than sort of leave it till later on and then find you're under very, big time constraints and pressures. So, yeah. Okay. One of the, let me just, there we are, move that on. Money laundering risks. So I mentioned this earlier on. This is the decentralized nature of consultant-led law firms. I don't know how many of you are working for those sorts of firms, but the SRA is basically saying that because it's decentralized, so i.e. you have the hub, which is in effect the firm with all the operations behind it, and then you've got all the consultants sort of sitting out in the country, that actually there is a risk in terms of money laundering because things may not get done. Now, I've worked with some of these firms, and what they tend to do is the due diligence right at the very beginning. So the instructions come into the hub, they do the due diligence, and then once everything's been passed, they then send it to the consultant, and the consultant then moves forward with the work from there. Now, of course, what that then has a concern around is, well, has the hub passed out all the information in relation to the CDD that it carried on that client? And if it hasn't, then obviously how does the individual consultant then know, well, how do I monitor the risks on an ongoing basis? And even if they have, will the consultant, as part of the process, be carrying out ongoing monitoring based on what the findings were? Just because the hub might find something low risk today, something might come up that actually the consultant says, well, it's medium risk or it's high risk. And how does that then get fed back to the central hub? So there's quite a few issues there. What the SRA said was that firms of consultants operating semi-independently and often remotely had increased in number since the pandemic. And I've been looking at these firms and their numbers, and they are substantial. These firm structures can be of benefit to firms and solicitors, but their decentralized nature can carry risks. We've noted that it is sometimes difficult for these firms to keep a central AML policy in operation to monitor compliance and to ensure a consistent standard across the firm. Firms' money laundering and compliance officers and reporting officers will need to be more vigilant and potentially more interventionist in order to make sure that the firm is not put at risk by non-compliance. Firms should also check the level of AML knowledge of new entrants to the firm and undertake training where needed. A new consultant who previously occupied a partnership role may, for example, be unfamiliar with AML processes because these were delegated to other staff. So you can see there are some real issues there. But of course, there are some things there that touch on other firms as well. So certainly induction training, ongoing AML training, ongoing monitoring of client matters and such like. So I don't know whether you had any thoughts on that one, Mariam?
No, I agree with what you said. I think just setting expectations very early, what is required from consultant and what is the firm's risk appetite and compliance culture.
Yeah, very much so. I mean, I did do an article very recently on these types of firms, and I got some feedback from some ex-consultants from these particular firms. And certainly consultants need to be very, very careful, because apparently there are some firms out there who are in effect taking shortcuts and saying, well, if there's a problem, then it's going to be on the consultant's head, not ours. So it is interesting to hear some of the thoughts that and views that some people have got out there on that. Okay, identity documents. Wanted to remind you of something. So did you know that the LSAG, the Legal Sector Affinity Group Guidance 6.14.4, now allows a single government-based, government-issued document, such as a driving license, to be accepted for both proof of ID and address. And this, as Mariam confirmed earlier on, is to do with bringing things into line with the EU, because in effect everybody has to have an EU identity card, and that has their picture on it, dates of birth, or in effect all the details that you have on your driving license. And so your driving license brings that all in. Your passport, of course, doesn't have your address, so that can't be used for that purpose. But it seems that quite a lot of people aren't aware of this particular change. Others are aware of it, but have actually chosen, because of the risks involved in the work that they deal with, not to just use the driving license. They want to stick with the list A and B documents, which is fine. It is down to individual firms to determine. But I just wanted to put this one out there because, you know, if there are firms that are handling low risk work, then do you need to go overboard with various documents when you can just use this one? I was in discussion with somebody yesterday, because there seemed to be a view that in terms of driving licenses, people didn't need to update them. They do, and it's a criminal offence not to, and you can get £1,000 fine for not updating your driving licence. So your driving licence, when produced, should be correct. So, you know, the name and everything else should be correct. So just wanted to put that one out there. Mariam, had you got any final thoughts on ID documents?
No, I've just for sale, residential sale, if you represent clients selling a property that they don't live in, just make sure that you always get proof of address linking the client with the property being sold. Yes. I thought that it many files, and unfortunately I've seen many files not having this evidence.
Yes. Yeah, and I know a lot of people actually use the HMLR alert system as well. So if somebody decides to try and sell your house from underneath you, you get told about it before it happens. So yeah, there are precautions out there. Mariam, I'm going to hand over to you now.
Perfect. I would like to start with FC updated guidance. As legal sector, we follow ELSA guidance. However, FC PEP guidance is sort of best practice, and other sectors refer to it. and it has been updated in July. The main change relates to non-executive board members of civil departments in the UK, and these should not be treated as PEPs. We have as well some clarifications regarding sign-off of PEPs. For example, lower risk PEPs might be appropriate for them to be signed off by someone having a lower seniority within the firm. However, as always, please make a risk-based approach applicable to your firm's risk appetite. For example, if you don't have many PEPs, if you don't act for PEPs on a regular basis, I would still recommend for the MLRO to approve a PEP client, regardless whether they're domestic or non-domestic. But that might be useful to review because this guidance has been updated. Brian, do you want to add anything?
No, nothing for me.
We have some changes in relation to Companies House coming soon. We have already a change in relation to disclosure of trust information. So now a member of the public can apply for such information. However, they need to show legitimate interest. And we have some mandatory identity verification checks coming, 18th of November. These checks are in line with the Economic Crime Act. Regarding new directors, they will need to verify their identity to incorporate a company or be appointed to an existing company. Existing directors will need to confirm they have verified their identity at the same time as they file their next annual confirmation statement during a 12-month transition period, and existing PSCs will need to verify their identity in line with an appointed day within 12 months of the commencement of mandatory identity verification on 18th of November. So it is the next stage of the changes, especially if you provide trust and company services. Make sure that you're up to date, make sure that you update your relevant policies and train your staff of the relevant teams.
Yeah, it's really good to see these changes coming through now because criminals have used Companies House as a means of sort of pushing forward their criminal activities, and the poor innocent people who have their houses, their addresses hijacked and things like this. Hopefully, they will see comfort going forward with these things. So yeah, definitely a good move. National Economic Crime Centre annual report there, Mariam.
This is a very good resource in relation to fraud, and we have now failure to prevent fraud offence in force. So this report, they have really good examples of fraud that applicable firms might want to implement to their policies. However, I would like to quote two things I find very interesting. Money laundering, sanctions evasion, and corruption continues to enable and amplify the harm caused by organized crime and kleptocrats and undermine confidence in the UK financial system. Again, we have the same focus as for other enforcement agencies and regulatory bodies, which is money laundering, sanction evasion, and corruption. That's why we have more tightened PEP regime. And something that, again, is useful for the legal sector, it is likely that the already high threat from Chinese-speaking money laundering networks in the UK continues to grow. So again, we have guidance for legal sector in relation to Chinese underground banking funds coming from China. So again, this is relevant. And if you have many clients speaking Chinese, or is there's a higher risk of such money laundering, please ensure you consider it. Report also mentions the fact that money laundering still uses traditional methods such as cash, digital assets, bank and non-bank payment services provider. So again, we have loads of methods of money laundering, as well as fraud. Unfortunately, fraud threat has risen since 2023. So again, it is on agenda for regulatory bodies, government. So make sure that you provide regular training in relation to this aspect.
Yeah, certainly. I saw something yesterday, I think it was, and the amount of money that is subject to fraud is just astronomical.
Yeah.
So, yeah, big problem. Okay.
We have a list of priorities published by NCFCA, and I wanted to include it because, again, another useful resource in relation to jurisdictions that are high risk for specific purposes, such as international offenders. We have money mules. We have, let me have a look, the financing terrorists, etc. So we can see that criminal cash, crypto assets, etc. are focus for a lot of regulatory bodies. And again, if you don't get it right, it is time to get it right.
Yeah.
And make sure that you read it. Again, it's very useful. Cooperation between sectors, between private and public bodies is mentioned as well. So we might see more publications, more reports, more legislation focusing on cooperation and sharing data, as Brian mentioned, such as banks.
Yeah. Yeah, I mean, one of the things that I can see on there is money mules, and I've seen a lot of news items recently in relation to that. So, yeah, these are things which firms definitely need to read up on. And again, I know there is a shortage of time, but if the SRA aren't going to accept a lack of time as a reason to not read these things, then, somebody needs to sort of read it. Okay. Breaches of the sanction regime, we've had some.
We have 3. Actually, we had another one that I forgot to add, that we had publication from September. I really encourage reading those publications because at the end, we have as well compliance lessons. So OFSI will say what is important, what lesson can be learned, what they focus on, what they look at when reviewing the breach. With Marcon, we have breach which occurred before strict liability came into force. So that's why we have slightly different wording within the publication. But in this scenario, we have a designated entity making payment directly to their client. It was via Gazprom Bank, so it was a non-EU bank. However, a designated entity overpaid. And Marco made the instruction to return those funds. And making instructions to return those funds to a designated entity meant that they breach UK sanctions regime because they make funds available to a designated entity. So it was a subsidiary of the UK company. So again, make sure that you understand UK sanctions regime. And what is interesting, I would like to quote from this publication. OFSI will not necessarily consider the existence of sanctions policy and processes mitigating if they are not fit for purpose. So if you have just sanctions policy saying what is sanctions, what is a designated entity, and it actually doesn't say what are processes in place, what mitigation action you have, OFSI will not consider it as a defense. As simple as it is. The next breach, we have Van Kees Bank. I do apologize if I mispronounce it. In this scenario, actually OFSI notified the bank that one of the clients might become a designated entity, so they had heads up. After the list has been updated and one of the clients become a designated entity, they didn't do anything. Within 24 hours, this client, who is a designated entity, they withdrew £200 and they made a simple card payment, for £8.99. So what we see here is it doesn't matter how much you transfer, how much you make available to a designated entity is still a breach.
Yeah.
And we have a third one from September. If anyone needs a link, just let us know and we'll send you. It is a ColorCon, which we have breaches in relation to a general license. So it was a subsidiary of the UK company in Moscow. What is interesting, they made a payment to people who are not designated entities. However, they used banks, which are designated entities. And it was a regular payments as part of the employment, so salaries, but also for medical reason. And for some transfers, they had general license, and for some they haven't. Even though they had a general license, it was not used properly. So my advice always, if you want to use a general license, if you want to rely on it, or if you want to apply for specific license, you have to make sure that you comply with it. Don't make payment just because they're similar to a general license. This has to be specific. And again, make sure you understand what you do and make sure that that you don't breach UK sanctions regime. And again, if you have not signed up yet for the alerts, when the sanctions list is updated, make sure you do it. Fine, do you want to add anything?
Well, I was just going to remind people that don't get sanctions mixed up with AML requirements. You might not be covered by the money laundering regulations, but you're certainly covered by the sanctions regime. So, don't forget that. Okay, struck off from Companies House registers.
This is in relation to being non-compliant with requirements in relation to registered office under the Companies Act 2006. It was a multi-agency action. They've actually visited the addresses on the Companies House. They focus on high-risk addresses. For example, one company registered between 4,000 and 5,000 businesses at one address in London, when in fact the company was based in another part of the UK and even in some cases overseas. So again, we see some positive steps in relation to Companies House Register. As mentioned, we'll have as well updates in relation to verification of identity of directors. So again, I think it's a positive.
Absolutely. I mean, you can see the mess that Companies House is in, and they've got a lot of work to do to get the confidence back of people. And really, it's not really their fault, because they didn't have the remit in legislation to be able to sort of audit and things like that. The fact that they now have that is you can clearly see that coming through. So, but they've still got a lot of work to do. Okay, so we've got a Barclays fine.
This is a fine in relation to separate filings in relation to risk management, poor risk management of financial crimes. I still hear opinions that we shouldn't need to do source of funds, source of wealth checks if money comes from a UK bank account. No, it doesn't work like this, unfortunately. We see major banks being fined for breaches of money laundering, of terrorist financing, etc., of financial crime. However, I wanted to include this case because the lessons can be applicable for law firms. Something the FCA said, one simple check it could have done was look at the financial services register before opening the account. Had it done so, it would have seen that the wealth tech was not permitted by the FCA to hold client money. So if they check before commencing a business relationship with the wealth tech, they would see that they shouldn't actually send client money to this company. And it would have taken 5 seconds to check the register. It is very similar to checking the sanctions list.
Yeah.
There's no excuse. So again, simple checks would have prevented all majority of what has happened later. No checks have been done before commencing business relationship as required by regulation. There was lack of ongoing monitoring, very simple, and actually there was no consideration of risk of money laundering, so they've done it incorrectly. And I think if such big banks don't comply with money laundering regulations and other relevant legislation, how we can expect smaller entities to comply? But again, very good lesson to be learned. Have a look at the FCA publication because there are very clear breaches.
Yeah, I have to say, I mean, I do get very, very worried about the banks. And I have seen over the years so many of these banks getting involved in money laundering and things like that. And I remember HSBC, I've read a specific book on HSBC, and it was involved in laundering the proceeds of crime from one of the biggest drug cartels. And people were just walking in and out with bags of money, and you think, where were the questions? And okay, you can understand maybe in South American countries where, there's families being threatened and bank families being threatened and things like that. But when you look at some of the cases we've seen in the UK, where people are walking in and out of banks with, bags full of money, you just think, what is going on here? So, yeah, I have to say, when it comes to relying on banks to do CDD, I would prefer to do it myself, and that's putting it politely. But there you go. Okay, let's have a look. Council of Europe, what have they got to say?
This is a really good follow-up from the previous webinar when I mentioned FATF report on terrorist funding on terrorist groups. So we see more now attacks being conducted by single cells, not bigger cells. In relation to technology, it has been confirmed that technology play a key role in preparation, planning, and subsequently promoting terrorist attacks. So again, we need to understand how technology is used by terrorist groups to ensure we can have appropriate controls in relation to terrorist funding. The report as well confirmed that terrorists use both legitimate and illegitimate funds to fund terrorist attacks. However, such funding requires new technologies, and actually new technologies should be considered as part of the firm-wide risk assessment of money laundering terrorist financing. So again, it is a very useful resource. Something that they highlight that terrorists use social media platforms, small or micro platforms, and terrorist-hosted website, gaming platform as well. So we have, again, gaming sector being highlighted. So I would suggest reading it to understand how new technologies and other technologies are used by the terrorist groups. And as well, I think that even though it is for the EU publication, it is very useful still for the UK law firms to understand this aspect.
Yeah, absolutely. Yeah, crypto is there, and technology is there, and I mean, it's all being used for the wrong reasons. But there you go. Okay, what's Rusi got to say?
I've put it again because we have new failure to prevent fraud offense. They have a lot of examples. They focus on money moves and as well outright push payments. Unfortunately, we know that fraudsters target vulnerable people. So from the other side, law firms should ensure that they know how to support a victim of a potential fraud, what to do in such scenario. I recently posted an article on LinkedIn about it. Make sure you have appropriate controls in place when dealing with vulnerable clients, and understand what types of fraud are currently popular. It's a very bad word, but we have investment, romance fraud, push payments, etc. So again, I think it's a very good resource. For example, if you want to deliver training on fraud to your team members.
Yep, I certainly get quite a few things from RUSI, so it is a useful source. Investigation Calypso.
I put it here because it's a very good example of trade-based money laundering. If you have a corporate and commercial team, again, this is a very good read. It was a huge investigation. There was cooperation between quite a few countries. And here we have goods imported from China. And we have misrepresentation of those goods or misevaluation of the goods. And then they're being sold to other countries. And unfortunately, we have VAT fraud because some actors rely on VAT exemption, import exemption. We have then those goods are fraudulently sold to another countries. However, in reality, they're kept in a warehouse, which is operated by an organized group, and then they sell it to other entities using obviously fraudulent documents, and those fraudulent documents are being destroyed as soon as possible. So it is a massive operation. However, again, we have China being involved in money laundering. We have multiple EU member states, and it is a very good example how complex can be money laundering, but as well that often it links with other offenses. So it might be good if you have international team, if you are involved in international trade. This is a very good case.
Yeah, I remember when I was in practice, I actually helped out with a case of this sort of fraud in terms of international VAT fraud and things like that. And it's it's a really interesting one to look at. Okay, I appreciate we're sort of running out of time, but we haven't got any questions on the system. But if you do want to put some questions on, then we'll have a go at answering those. But ex-directors as well, Mariam, what have they been up to?
We have the investigation being opened in relation to directors of Abramovich company. This is in relation to VAT law. They tried to recover 25 million euros of unpaid tax. Why I put it here? Cyprus is a high risk jurisdiction in relation to sanctions evasion. So make sure that it is on your radar. This country as well is mentioned by the SRA in their sanctions guidance.
Yeah, and Cyprus, obviously, we've got UK bases over there and things like that. So, we shouldn't be taking it for granted that just because there's a UK presence there, that everything is fine and dandy. It's, as you say, a high-risk country. Yeah. Okay. I'll give you a rest, Mariam. Thank you for all of that. We still haven't got any questions on, but I think what I would say is if you do have any questions and you want to raise those offline, then please do send us an email. Our email addresses were right on the front slide. So I think we're right up to time. So thanks again, Mariam, for all your input. Thank you for everybody for attending. And hopefully we'll see you at future webinars. But as always, please do stay safe. Bye-bye.
Thank you. Bye.